of the bell, you can see that the dealers came in right at 14.30, right at 14.30, not after 14.30, but right on 14.30. You can see that this is the open here. That's at 14.30. So that's where the sell came in for that offer, right? Yeah. Remember, it's right on 14.30. That candle finishes at 14.31. So it's on the opening bell we get that sell signal. And then, of course, the fund hedge number 1 comes in at 14.31 for a buy trade, which is obviously this buy trade here, isn't it? So obviously you're looking at that and wondering, can I see any evidence of any buying coming in at that stage, right? So the sell comes in there at 420 and the buy comes in there at 377s. And you're obviously looking at that and saying, well, that's around about a 40-point drop, which is about $800 in 2 minutes. And then you get $1,000 on the way back up within the next 10 minutes, which is nearly $2,000. Now, when we think about that as a storyline, we've still got to see it. Now, at the cash open, we're not going to be sure. Of course, we're not going to be sure. Come on. It's cash open. We're going to have to make a very, very quick decision. So how do you deal the cash open? You deal it like any other volatility trade. If you're not sure and you think that they might, because this is a hedge fund seller coming in or a buyer coming in, they might want to take it higher to sell it. They might want to take it lower to buy it. So you're starting to think about it as that, as a process. When the hedge fund comes straight in, the only way you can deal there is to try and sell it as soon as it starts dropping. If you don't get that higher price, you have to get into it. And likewise with this one, you might be thinking to yourself, well, it's the RGL, of course. This is the overnight RGL that we've got here. This is the RTH, of course, regular trading hours. So with the RTH, we know that this is the blue side market right here. This isn't the cash open market price here for the RGL. This is last night's big board. So we know that if the market goes bid out of here, the big board stays green. Well, that's quite significant, is it not? The big board is this dotted line here. This big board here at 377 is the NASDAQ big board buy side, sell side level. There it is right there. So if the price goes back green, that's as good a signal as any to grab a little bit of buy side business there off the 380s, which ultimately traded the 430s for your $1,000. So when we understand that as a little cheeky process, we understand that there is a lot of quick decisions that might be made, but we've still got to be alert to the possibilities that it's a building process. But when you start using things like the RGLs to figure it out, life becomes a little bit, well, just a little bit easier. So when we start to recognize how easy it becomes, what we've got to try and do is now deal inside of those areas. We can recognize that once the market goes blue, of course, you start thinking about the spring trades, and then you start doing what? You start pricing out the spring trades, right? That's what we do as prop traders, using this idea here of buy side only. We're looking at these springs and we're pricing out the springs. We're looking at the spring trade here and we're pricing out the spring. We get a spring trade here, we make some nice money. We get a spring trade here, we make some nice money. We love the monies. And all we've got to do is keep the process. We had a failed auction here. What does that mean? Failed auction in a blue market means that the intern's buy trade is there. What are we trying to do? We're trying to get in as the price breaks the tipping price. So the tipping price would probably be about here. So if we're going to buy this, we're going to buy it here. We're going to try and make a profit to the top line. That's what we're going to try and do, is just get the top line. And if the top line reject it, what does that tell you? That immediately tells you that there's a commercial seller resting at the top edge. You already knew that that was probable, because if you look in the background, you'd already seen that level 2 rejection right there. And what did we tell you to do with your level 2 rejections? How many people have done it? We told you to draw a box around your level 2 rejections, didn't we? We told you to draw a box around your level 2 rejections. How many people have got boxes on their charts right now? So when you see a box here and you buy here, you're already aware that there may be a commercial seller in this location. And that means that you're already prepared for the fact that if a seller comes straight back in here, you simply just ditch your long position and say, cheers, I'll take my monies and I'll get off for the time being at least. You don't know that until it does reverse out. In other words, until it does give you a Heisman sell. Until it does give you a Heisman sell. So when we see the Heisman sell coming in, we can recognize we're now looking to try and then buy only on springs because, well, we're not going to get a buy trade up here. We've not had a buy trade up here. We've had two sells so far. So with two sells so far into the top edge, that's now that trade busted, right? Failed auction here, looking to press. That's a difficult one because we've not got a pivot price to press into except for the top edge here. So that little pivot that came in there only came in because we started to break north out of there. So whether you took it, whether you didn't, that would have been the challenge. As it transpires, you would have scratched that trade anyway with this failed auction here. So with a failed auction here, you now know almost with 100% certainty that it's going to press and squeeze the bottom edge here because that would be a normal intern sell, correct? This would be an intern short sell. So obviously, if we know that this is going to be an intern short sell, we know that this is going to be something that we're watching for. Now, the question, of course, in the background is what? First of all, let's deal with these questions. Was that a spring trade, yes or no? Was this a spring trade, yes or no? That was a spring trade because the price immediately rejected, right? This was not a spring trade because the sellers accepted this lower price over the next two candles. So because of that, you're already prepared for the fact that this is likely to now want better than what we got in the last time. And that's exactly what's now happened, as they've now got better than what they had the last time. So we start recognizing those things, don't we? What else did we recognize? We recognized that this was the XE candle, correct? On the face of it, this is going to be your XE candle. We know that 10 past the hour and 22 the hour, 10 past the hour and 22 the hour are going to be important XE candles because they're going to use the 10-minute volume from the big top of the hour trades and bottom of the hour trades, correct? So when we see that the 10 past candle goes up and then immediately sells, does that give you even more confidence that that's now going to press the sell? So you've now had this lower hold and you've now had the 10 past XE candle getting reversed, and now you've got that press coming in there. You see it? So the question is, when you see the big XE candles, you should already have an idea about what you're expecting. You should already be starting to think about it. Because when are the two biggest XE candles on each chart? On the hour, top of the hour, bottom of the hour. Top of the hour, bottom of the hour. So if nothing happens at the top of the hour, bottom of the hour, what is the next most important XE candle? 10 past the hour and 22 the hour. 10 past the hour and 22 the hour. Because if the hour candle didn't do anything, they're still building the position. Remember, they moved to the next XE? Remember that conversation about XEs? They moved to the next XE candle. So we start reading the 10 past candle with a very, very heightened degree of interest in it. And when that candle goes short, I think it's sell side business, guys. I think it's sell side business. Yeah. So obviously we got a sell coming in this candle, and it did reverse. And then it reversed straight back down again to the sell within the first sort of 5 minutes. So you're already thinking to yourself, well, they tried to reverse it, but somebody came straight back in against that XE and sold it. So when this starts to build, you're starting to think about that sell. Now, I was looking at the stock market, and I did shout it out for anybody that there's been no buyers in the stocks themselves at all. And the stock price has just basically crumbled since then. There was a big buyer came in at your top of the hour. A big buyer did come in at the top of the hour, and they managed to push the S&P back up towards the top edge shortly afterwards. But obviously we're looking at the Nasdaq here, so it's not going to tie in with the S&P chart. The S&P chart. So it is what it is. You've got to make those reads. You've got to make those adjustments to what's happening in the background. And if anything sets up, then of course you're ready and able to take advantage of it setting up. And the Nasdaq does look very cheap, to be honest, at the moment, but that's because I'm seeing a lot of selling on it, and that's pretty much the reason why. But we'll wait to see if the S&P decides it wants to buy the market back as well. So if the S&P starts buying, the Nasdaq might be the best place to start looking for that buy reversal. But at the moment, I don't see very many big buy orders coming in just yet for the S&P at this point. Let's have a look around some of the other markets and see if there's been anything interesting. I don't see anything on oil just now. That seems as if it's a busted deal on the oil. Don't see much of an opportunity to do much. Little buyer came on the books there for the Nasdaq. That's interesting. It's not shown up in here, so a little buyer came in there for the Nasdaq. So let's see if they decide to run the bottom edges on the Nasdaq, see if any of these hedge funds decide that they fancy a bit of business here. So I'm watching this with a bit more interest. 15,350s, maybe 15,360 break for that buyer to show up on the one of these two funds. Let's see what happens. Let's see what happens.